Well, good morning, everyone. Welcome to our Thursday morning trading session. The markets just opened up, and it looks like they opened up to a rather substantial gap higher. You can see that quite plainly here on the Eagle, which put in a big rally in the overnight. London session, not so much, a little choppier. Or I guess actually they had a little bit of a decline until about an hour or two before the North American Open. And then they started to bottom out and put in a rally. So this is going to look like a pretty big opening gap to the market. And we'll just see whether they try to get into that gap today. I imagine they will. In fact, if you wanted to be more aggressive on the trade, you've got a oh, that's out of reach. Let's try it like this. Can I risk it to here? I can. Now, the problem with this trade, see, what I'm looking for is a second push on this signal. In fact, I'm going to change it so that I enter just below the low of this current candle in case it, shoot, there we go, in case it does one of those. So what I'm looking for now is a second push. This is essentially a rule of three signal, but we've had a very tiny test of the extreme. That's what makes this a very, well, I don't want to say risky, because there's a good chance the market will try to come down today. But given where my stops are, is it going to be enough to ride out a test of the extreme if the market chooses to retest the highs? I'm getting similar signals here. As you can see on the Raptor, we're getting a trend change signal. So we have the same type of thing. Here's our trend change signal. The chart going into the cloud. And now we expect this cloud to offer some sort of resistance to prices heading lower. All right, so there's a early morning effort, and it looks like, at the moment anyhow, they're going to give us one more, at least one more little move higher here before they try to head lower. All right, so here they come. Now we're going to have a proper rule of three. We're going to get three sell signals against the bullish band. And we'll see here in a moment how that's going to play out. Crude oil rallying quite a bit. Here's crude oil on the Eagle. And where did they open? They opened right about here. The rally was already underway. A little trend change and hard edge bounces, and a very good progression for crude oil. All right, so now we have the rule of three signal. And the rule of three signal occurs when you get 1, 2, 3 signals against the band on the Eagle. But what's really important about the rule of three is that you've had a test of the extreme. You've had a retest of the highs. And here they go? Are they going to try to get in there? All right, we'll just let that do its thing. Here is the Raptor, the cloud crossing over, market trading back into the cloud. And no, the trading range still holding. All right, well, we might be waiting a little bit longer. Richard asked, Eric, can you place some key support and resistance lines for the expected pullback? Okay, well, you know we have the support and resistance suite. And you can see that right now, we're pretty much skewered by the primary resistance. So a key line is going to be down here around 4160. And if we break through that, the primary support is around 4135.36. So I would say those are going to be your first two important levels. If we do see the market break down, I'm going to be looking at 4160, and if it breaks through there, I'm going to be looking around 4136, 35, 36 as my probable support zones. Wow, they are quite content to go sideways at the moment. This is the range that they've established on the day. You could bracket this range. You could place a buy order above and a sell order beneath. What time is it? We're almost 10 minutes into the session, so it's still early. All right, so we're filled to the short side. Let's see if the breakout holds now. Problem with breakouts is that most breakouts fail, at least for the short term. Most breakouts give you a little bit of a head fake, if you will. They break out and then they retreat, and that's what's going on here in the Raptor. It's trying to. Okay, we hit our break-even trigger, and let's see whether or not the sellers managed to push it lower. No. So we took profit on one and got stopped on the other at break-even. We'll see if we got another chance to come back here with yet another sell signal. There it is. And we'll short the market. All right, so 41.60, the first target to the downside. I had my profit-taking target. Okay, hit profit on that one, and no, don't retreat on the stop. Oh, darn it, that's twice in a row. All right, well, we scalped out for 2 profits, and they tagged me on the break even. We'll try it again. Trying to work our way down to the 41.60 line. Lots going on here. See the market whipping back and forth. The Geiger counter actually fairly neutral. Come on, get down there. Come on, get going. And we're seeing a little bit more buying pressure come into the market. Let's see if the sellers can't turn it around again. Where are we at? We're only at 41.70, so we should see the market continue a little bit lower from here. Unless they try to get into that. There we go. Unless they try to get back into this hard edge, I'm going to try to hold my stop above that immediate or that last swing high. Just until we can get a little bit of elbow room. We're in at break even. Oh, look at this. The Eagle trade working out pretty good also, but the rule of 3 signal technically came right here. Oh no, sorry, technically came right here. Got that little bit of a retracement. We did get a green bar sell. Okay, come on, you guys, don't stop now. Profit target here on the Eagle at 41.66. That's our high probability target. And looking for 41.60, which would be the median line on the support and resistance suite. Don't want my stop to roll just yet. All right, well, we'll let them sort themselves out on that one. And the Eagle, unfortunately, bounced a little bit and looks like took me on a break even there. Oh, well done. Mo asks a very good question here. Okay, before I get to Mo's question, I want to point something out here. Okay, you see how the market came up and now is starting to head lower? This is the time I start to get much more aggressive with my stop. Why? Because the sellers have shown me that they're prepared to press the market after the buyers put in a decent rally, right? The buyers tried to retest the highs. So now I want to start rolling my stop much more aggressively, because if the buyers pick up the market again here, which they did on this little itty bitty breakout, chances are that they're going to try to run the market higher still and maybe take out my stop. So that was the time to start to get more aggressive with the stops. Ended up taking me out around break even, which is okay. It looks like they may end up continuing lower still, but when this was happening, I had no idea that was going on. So the sellers had control. They're pushing the market lower. I want to be in with them. They try to break out the lows. The buyers take the market back. All right. So that was the reason I wanted to start rolling my stops much more aggressively there. And we'll see now whether in fact the buyers don't end up pushing it higher. Okay, so Mo makes a great comment here. Mo says, Eric, a quick question. I found that trading the YM, that's the mini Dow for those of you bad with your stock initials, I found that trading the YM aftermarket has been very beneficial. Last night I took 8 trades on the micro macro pullback and all 8 trades were successful. These trades were all on SIM. The question I have is this: if I manage to do well on the SIM night after night to a very high percentage, how will that bode in live trading? Well, Mo, nothing changes going from SIM to live other than, the obvious fact that you're now trading live money. The problem that most traders experience when they go live is that all of a sudden you realize you're trading with real money and the blood runs a little bit hotter. And there's nothing you can really do to avoid that. You can try your best to pretend it's real money when you're doing the sim. Try not to let it turn into a video game. But if you can do it on sim, you can do it with real money. The simulators nowadays are so realistic. In fact, I almost think they piggyback your order on a live order. The only thing about trading the overnight is that it's not always going to be active. So you need to prepare yourself for that. And there's nothing wrong with it. The nice thing about trading the overnight is that the markets tend to be a little bit more subdued. You got a little bit more time to think. You got, you don't get as much choppiness necessarily. See what we've got going on here now. And all this occurred within the span of about 5 or 6 minutes. This would be an hour's trading on the overnight. So everything develops a lot slower. In fact, I recommend to people when they're first starting out to try trading the Asian session or the after hours markets because they do move a little bit slower. They do give you a little bit more time to think about things. So yeah, Mo, if you can do it in sim, you can do it for real. Now, the only thing I would caution you with as well is the 8 trades. I know the first micro macro cross is a very high probability signal, and I always tell you, I take it almost without exception. In fact, here's one right now. First micro macro cross signal. We'll set it up. It'll look something like this. Now we're into a macro pullback, so we'll look at that. And it is a very, very high probability signal, something that you can take with a great deal of confidence. But 8 trades is a lot. You should try to restrict your trades to, well, I always tell people, as many times as you can flip heads, that's how many times you should be trading. Oh, and by the way, we've got a lot of sideways stuff going on here, right? Oh, there you go. There you go, make a liar out of me. 8 trades is a lot. To flip heads 8 times in a row, you did very well, even off a first micro macro cross, because you see, if the market conditions are choppy, as they are here, this first micro macro cross did not work out, right? So now they're going to try the first micro macro cross to the upside, all right? So here we go, first micro macro cross higher. Let's see if they try to take the market to the upside now. The point I'm trying to make is to go 8 for 8 is really, really difficult. To go 4 for 4 is a lot easier. And even though initially you might be making less money, in the long run you will make more money because you're going to be capitalizing on fewer signals. See, look at this, first micro macro cross. Had I taken it on the hash mark, I would have hit the break even, but now what? Now the market's given a pullback, we're struggling a bit. And why is that? Why is this first micro macro cross struggling? Why did this one not work out? It's the context, right? It's the sideways market that we're experiencing at the moment versus if we go back here into the overnight when you were trading. See, what's the difference here? The market's got some trend to it. So first micro macro cross signal right here. It fades a little bit, turns into a 4-arrow consolidation and a macro pullback, but it didn't fade too much. First micro macro cross. Oh, actually this one did too. So a little bit of sideways action, but still better follow through. Another first micro macro cross with a little bit of a fade to it, but it worked out. And here we have, a little bit more of a breakout type scenario, a little bit more of a trend, first micro macro cross. So you need to kind of gauge the overall context when you're looking at the signal. Now this may well turn out to work out for us, but then again, given the context of the market, it may not. So I hope that makes sense. Oh, well, there you go. That improves your percentage too. Mo says, I only take the trades for 6 ticks on 2 contracts. Nothing wrong with that, Mo. 6 ticks on the YM will be very easy to get. See, anytime you tighten your profit objective, you will improve your winning percentage. That's how those spam emails do it. When they send you this spam. I had somebody, it was funny, when they first came out, I remember receiving them and they were boasting about trading systems that produced 70%. And then it went to 75, and then went to 80 and 85. And now I got one, believe it, I should have saved it. The trading system was right 99% of the time. Yeah, 99% of the time. I can tell you how you can be right 99% of the time on the E-mini is just trade for a single tick. When I used to follow the bond market more, I would trade for 3 ticks on the bond market. That's the 30-year bond, which is at $31 a tick. And you know what? Sometimes you'd be hard-pressed even to get 3 ticks out of bonds. Okay, just snooping around here a little bit. Uh-oh. Tony's stuck in a NQ trade and all this sideways action. He's stuck in the barbed wire to the long side. I think you're going to be okay there, Tony. It's looking like they're trying to find their feet here, trying to find some support. And of course, the trend is technically up. Uh-oh. Sorry, Tony. Here we come with the green bar sell. So we've got some short-term support here around the, looks like around the 41.66 line, which is right down here. Let's see how close we are to our, oh, we're close to the median line, just kind of hovering at the moment between the two. Yeah. Sorry, Tony. Tony says, come on, people, buy. But he got stopped. Yeah, we're still a little bit limbo. It's always a drag when you get caught and then the market, or you get into a trade and then all of a sudden the market decides to fall flat. All right, well, we're getting a couple of signals here now. The market's still not entirely clear of this trading range, and the overlap is not encouraging. See, we've still got quite a bit of overlap here. We're still kind of teasing the bottom end of this trading range. Could I do the macro pullback and cover way up there? Oh, I could. And what I might do is turn this into a runner if it fills. And all I'm looking to do here is to cover the top end of the trading range. Oops, hit the break even. Let's get that going. Come on, sellers. point. So we're at the break even right now. Are they going to take out the low? Oh, shoot. I know I pushed it a little bit too hard there. Got a little quick with my stop, I think. Yeah, I did too. Yeah, so the signal did work out. Like I said, I was a little bit fast with my stop there, but we did have the right idea. Oh, and there they go. So gold mustering a little bit of a rally. Not much. Sorry, folks, I'm just trying to look at a couple different things going on here. Mo is asking, Eric, one other question. When the micro macro pullback generates the buy bar signal, it moves too fast. Do you wait until it pulls back to enter the trade or wait for a new signal to enter? So I think what Mo is asking is, when this is technically our first, right here is our first micro macro pullback. And as I'm going to set up, sometimes the trade will start to move. Oh, here, wait a sec, let's do it this way, because this one's better. So here's our first micro macro cross signal. As I go to set up the trade, sometimes it will have already moved, and now it's, crap, I was too late getting at it. Okay, there's a couple of things you can do with this. If you don't already have the trade manager, you may consider getting the Trailblazer, which is the tool that I have here on the Raptor. And what you can do with the Trailblazer is you can simply use your buy or sell market buttons. And it's a one-click entry system. So you're going to get your profit targets, you're going to get your stop losses, everything is going to come into play once you hit your buy or sell market buttons. That's on the Trailblazer. If you already have the trade manager, you can do a similar thing. You can also use your buy and sell market buttons. You're not going to get your profit objective, so you're going to have to watch for that. But you will get your stop loss. So it's a little bit of a compromise. But most question is, well, what if you miss the signal? I wait for the next signal. The market pulls back, and I think what Mo is asking is, okay, prices are below here. Do I activate the signal now and try to get this hash mark should the market rally from here? No, I tend to wait for the next signal. So in that case, I would be waiting and waiting and waiting, and we got a signal. Well, actually, we didn't get a signal until right here. So this now becomes my first micro macro cross, because everything goes out of sync and comes back into sync. And now I would be looking to trade that one, and hopefully the market's not moving so fast that it runs away on me there. I know it's tough. It's really a tough call. Tony's asking, are you looking for 41.57? I was looking around 41.60 as my initial target. That's the median line, and below here, I'd be looking down here to the primary support around 41.36, 37. Something like that. The market does have some room here. Yeah, and Mo says he's just been entering the market on, or buying the market, I'm assuming on a buy order, like your buy and sell market buttons, when the signal occurs, hoping to get near the buy bar signal. Yeah, that's fine. That'll work. Depends how good your reactions are, I suppose. All right. So the market obviously getting into that early morning gap, slowing their descent somewhat now. We're starting to see the market drift a little bit sideways. Crude oil also gaining a little traction on the buy side. All right, you guys, excuse me for just a moment. I'm going to be right back. Okay, I'm back. What did I miss? Oh, it looks like the market just made another little bit of a breakout to the downside. Another first micro macro cross signal here on the hawk. And yeah, a couple of continuation signals here on the Raptor and the Eagle. The Falcon got shut out here because of this little flip-flopping on the trend line. Nice little late filter entry signal here on the Falcon though. Notice that one. And a very clean trend change signal on the Falcon back here. So the NQ falling off quite nicely. Sitting around 41.42 and looking for likely support to come in around here, 41.36, 37. They may come up a little shallow. May only even get as low as 41.40, but we'll hold out for the big stuff here. We'll see whether or not they don't get down there to the 36 line. Peter says, good morning, Eric. Price has stopped on your yellow zero support line, support and resistance line. Yes, I know. It's amazing how well they work, isn't it? Let me tell you, there's a lot of math that went into these bad boys. They're actually based on price activity as well. Here we go. There we go. We got 41.36. So we're all the way down now to the primary support. The market has moved two zones. Very often we will see it kind of settle in after it's moved two zones on the support and resistance suite. So we'll see if that doesn't give the buyers a little bit more traction. Oh, well done, Tony. Tony says he picked up that last dip lower on the NQ. Now he's only down $100. Well done. Yeah, pretty good start to the day. I suspect we're going to see a little bit of a pullback now. The market's come down a long ways. And we've definitely filled that early morning gap. So now it's going to be a tug of war to see who is in control, whether the buyers have enough to take the market back or whether the sellers are going to continue to control the market and force it lower still. Good analogy, Tony. Tony says it's like a three-way poker hand. You win the hand and you lose the money. Yeah, that's how it goes sometimes. All right, so we're dipping just a little bit lower here. Crude oil also starting to tail off somewhat. Here's crude oil on the Eagle. Watching this, and we are floundering a little bit here. We also have a little bit of a sideways range going on. Little bit of a test of the highs. Looking as though the sellers might try to take the market back. Let's see. Yeah, they're waffling quite a bit. I'm not going to touch that one just yet. Ryman's asking about that opening range gap. He says, can you define that gap? Sure. So I try to pay attention to where the market left off the previous trading day. So the market closes at around 13:15 my time. So it looks as though the closing price was somewhere around here, around 41.30. And of course, you can find that on any chart as well. If you don't make a note, you can just go to a charting site. And then where did the market open this morning? It opened right here. Okay, so when the market opened, this is what we had. This is where they closed. This is where they opened. So to the pit traders, this is going to be a substantial gap. Now, for one reason or another, the markets tend to fade into the gaps. Sometimes the gap will be so strong, it's what they call an expansion gap, where the market will just rally and just keep going. The momentum is so strong, you know, the market gapped through the overnight and the gap continues into the day. But what happens more often than not, especially if you allow the market a few minutes to settle, like I don't blindly start selling because there's a gap above the market, or pardon me, below the market. But if you allow, this did give me a bearish bias, this opening gap, because I know probably 8 times out of 10, the market is going to try to get into that gap sometime during the trading day. And then when you get a signal that coincides with it, so you get your rule of 3 signal, then all of a sudden you start thinking, maybe we will see the market move into the gap. And with the rule of 3, I let the ATR flip over. This now becomes my signal bar. I try to, cover it as far back as I can. And we come back with yet another signal, and then the market starts to fall off. And we got lots of activity going on until we finally fill that opening gap. So once the market was declining, I had a pretty good feeling that it was going to try to get into that gap and fill it. Now, what happened this morning is pretty much textbook. It doesn't always happen that way. Sometimes what will happen is the market will actually rally for a little bit and totally ignore the opening gap until later in the morning or even in the early afternoon, when all of a sudden it decides, okay, it's time to fill that gap, and then prices will reverse and get into there. So you can see now that we've filled the gap, it looks like there's a little bit of profit taking going on. We did get a soft edge buy right here on the Raptor. And once again, the soft edge buy is kind of like the rule of three is with the eagle. We need to see that test to the extreme. Now, with the soft edge buy, it's just going to be a quick little hiccup like this. So you need to be alert, but you don't buy it without that little retrace going on. Tony says, nice flag on the NQ. Pretty much textbook, isn't it? All right, so we're back into the hard edge on the Eagle and the Raptor. We've retreated back to the primary resistance line. So all these things are saying, hey, we should probably expect some sort of reaction here. Good question here from Tony. Tony asks, Eric, when there is a first micro macro cross in either direction, does the trade lose some validity if the signal takes a long time to print? No, or I don't think so. I know Ray always used to look for immediate momentum to come into the market. I don't think it's that imperative. What makes this first micro macro cross, okay, here, let's see. What makes this first micro macro cross less desirable than, say, this one back here? They're both first micro macro crosses, right? Micro line crosses the macro line, everything is in sync. What makes that one less desirable than this one? I'll give you guys a chance to look it over, give you Hunt and Peck typists a chance to type. Yeah, okay. A few people are saying here, well, the distance from the line, you're probably referring to the macro line. Too much of a move on the buy, so has the market has come up too high already? No, it's the trend. Right? We've got a serious downtrend going on. Right? The market just fell through the floor, and now we're coming in with a buy signal, and we're coming in with a buy signal without a reasonable retest of the lows. Had we seen a good test of the extreme, and then a first micro macro cross, that would tell me that, okay, the sellers took it to here, the buyers stepped in, now the buyers have stepped in at this level, it's okay to buy. But if I'm going to take this first micro macro cross signal, I pretty much have to cover the trade down below the lows to allow for a test of the, or a retest of the lows. Right? This one, on the other hand, is with trend. The market's been paying off big time to the downside. You know, macro pullback signal, No problem. Here's your money, sir. Even a very sloppy 4-arrow consolidation pays off. Macro pullback pays off. So it's paying off huge to the downside. Failed red bar buy pays off. Right? So everything to the downside is working. It's a little bit too early to commit to a trade to the upside. So let's see what happens from here. And again, the first micro-macro cross, it's a tight profit target, right? There is a chance we can get it. Here, we'll set it up so I know where the profit objective is. All right, so can we get it? Oh, they just kissed the profit target. If you're running a break even, you would have been stopped at break even. Oh, there you go. So you did get the profit objective. But the principle remains the same. See, what happens is, let's say you had a little bit more of a profit objective. Now all of a sudden you're getting your retest. This is your retest. So you'd have to keep your stops back far enough to try to ride that whole mess out. I'm not saying the market won't go higher. In fact, I suspect it will. But that's what makes that trade so much more difficult than the other one. Mo says, I just took a similar pullback on the Russell for 6 ticks. Almost the same chart. Yeah, I'm not surprised that the charts are very similar. Good morning, Jim. Jim giving us some advanced decline numbers here. He says just shy of 1900 on the sell, or pardon me, the buy, and 900 on the sell. But he says he's having a hard time getting into the market flow today. He says 6 trades for 3 ticks. He says, I suck today. I can't get into the flow. That's how it goes sometimes. You have to it takes a little while to get into the, like you said, the flow of things. Tony says, I feel your pain, Jim. Yeah, sometimes, I know, sometimes the market just does not play the way you think it should. And then when you look at it in hindsight, you say, how could I have been so silly? Right? It was obvious the market was going to head lower. How could I have been so silly? And look at this. We've actually gone below the primary support to the next support zone at 41.13. So now we're sandwiching between the primary support and the next support zone. I think what we're going to see happen, though, is if the buyers are finally able to master a little bit of a swing higher, we are going to see, if not some full-out rally, at least a little bit of profit taking. But for the time being, it's all bears. Okay, Ryman's asking on the trend swing indicator, how would it look on the E-mini? So I think what you're asking is the trade forecaster here. How does that play out on the E-mini? Let me load it up on the E-mini and I will pull that over here for you. Yeah, the chart's still loading. Sorry, it'll take a moment here. So a good morning overall. Some very nice activity. Some good opportunities. These are the kinds of days where it's actually fun to trade, where there's a little bit more activity going on. um, well, yeah, Jim, I know what you're talking about here. I've done the exact same thing. Jim says he was short the YM. He took 15 ticks. Now it's down 100 points. And left 85 ticks on the table. It happens. It happens. You know, one thing about trading is you can't beat yourself up too much, because remember what it is we're trying to do here. We're trying to forecast future events based on price activity, based on our tools. And that is far from an easy thing to do. Okay, we got the buyers coming in here a little bit. See if we can't put together a trade here before we close out. I do need to close out a little bit early again today. Today and tomorrow I've got a coaching session at the top of the hour, so I need to close up a little bit early so I can get prepared for that. The trend definitely lower for the most part. All right, so we've gotten a couple trend change signals. We got a trend change signal here on the Falcon. First micro macro cross on the Hawk. But once again, what's the difference between this first micro macro cross and the one we looked at earlier? Well, there's a little bit more structure here. We have the market actually, you know, floundering a little bit, retesting the lows, even though they're short-term retests. And we get a little better follow-through as a result. If I took this first micro macro cross signal right here, I would try to cover it below the low. Just because. Okay, so it looks as though the buyers are finally showing up. And I don't know what's going on here, Ryman. I can't get my trade forecaster to display correctly here on the E-mini. I'm gonna have to talk to Ben about that. Why is that not displaying right? It'll look pretty much the same as what you're seeing here on the NQ, however. You can see the chart on the NQ Eagle, and here's the E-mini Eagle, pretty much identical. All right, so we've got the buyers making a move here. Trying to push the market now. So here on the Raptor, we've got the cloud crossover. We'll see if we don't get that little bit of a retracement into the cloud. Sorry, I'm going to make a point of just following the one chart. I was looking at the gold chart, and I was bullish here on the NQ, just looking for a second chance, a little bit of a confirmation that the buyers were in fact going to press the market. And we kind of got that here when the clouds started crossing over on the Eagle and the Raptor. The band started to flip over. Crude oil used to be leading the market, but now it looks like it's more or less following the stock market around a little bit. Not a bad day, though. Not a bad day at all. All right, you guys, I've got to get ready for the meeting I have at the top of the hour. So if you please excuse me, we're going to close down the room a little bit early. Friday should be a pretty interesting day. The market does seem to have picked up a little bit of volatility after the FOMC minutes, and hopefully we'll have another strong session tomorrow. I'll see you guys then. Bye for now.